This can be one of the best times of the year to save yourself some tax, which I'm sure is going to get everyone's attention. So make sure you stick around because I'm going to go through one of the easiest ways that almost anyone can save tax. Hello everyone, my name is Rooshock, and today I'm going to be talking about one of the easiest ways you can save tax. Now this will be mainly based on an Australian audience, but the principles behind it probably could be applied pretty much worldwide because it is all about understanding your tax position. And what I mean by that is having an idea of what your current taxable income is, what you expect your final taxable income to be for the year, and something that is quite often forgotten, what you expect your future earning capacity will be, what you expect future year's taxable income will be. And please make sure you stick around to the end of the video because I've got a special offer for those that are watching the video where I can help you with some of this stuff at a really good discounted rate. Now you may be asking yourself, well, why is it important to understand? How is that going to help me save tax? And the reason is it will allow you to plan. So by understanding your current taxable position, what your expected end of year taxable position will be, and future earnings, it allows you to plan for this and maybe take advantage of changes in tax rates or rebates or offsets or bringing forward deductions, etc., which is what we're going to talk about. And by having that plan, it allows you to overall minimize your taxable position legally. Now, so some of the reasons why your tax plan, well, I'll bring them up here. And you've got things like tax rates, offsets, changes in tax law, government benefits, Medicare levy surcharge, and all these different thresholds that are going to be typically based on your taxable income. So by understanding what that is, you can go, well, am I meeting this? Or if my income was $5,000 lower or $5,000 higher, what would be the impact? Is it going to dramatically impact my tax position? And therefore, are there any strategies I can put in place that will help me, put me in a position where I'm going to be paying less tax or more optimized tax? So if I run through some of them in a little bit more detail. So we have marginal tax rates here. So as you can see by these marginal tax rates, depending on where your taxable income falls will depend on the rate of tax you're paying. So by being at a higher income level, you'll be paying a higher rate of tax. Therefore, if you could even out your income over multiple years, then it may make more sense because you may be paying that lower rate of tax overall rather than having one massive year and then one really small year. So that's why it's important to understand your taxable income or your expected taxable income for the year based on what tax rate you'll fall into. There also may be offsets you may be eligible for. So at the moment, we've got the low and middle income tax earners offset, so LMITO, and that caps out at $126,000 of taxable income. So if you could fall just under that, then you may be eligible for that, plus the little boost that was announced in the budget recently. So again, it's by understanding where you're at, you can understand, well, when is an offset going to be completely phased out? Now, some of these phase out dollar by dollar, so it may not make much difference, but some of them at the moment, like this addition for the budget, if you're $1 under, you're going to get that $420 additional. So by understanding where you're at, you could make sure that maybe you land within those brackets. You've then got changes in tax law, like we've currently got the instant asset write-off that's been boosted and stuff due to the measures over the last couple of years. Now that is going to be phasing out, I believe, on 30th of June 2023. So in next financial year, it may make sense for someone to bring forward an asset purchase. So again, if you don't know where you're at and you don't understand what's going on, it can be really hard for you to take advantage of some of these different changes that happen in tax law that may only be in for a certain period of time. You've got things such as the Medicare levy surcharge that if you're over $90,000 without hospital private health cover as a single, you're going to pay that, which is 1% of your taxable income. And that one is one that is a step kind of thing that if you hit $1 over, you're going to pay it. So again, it's something to be aware of that, you know, if you get towards that end of the year and there's a chance for you to take an overtime shift on the 30th of June, you go, okay, maybe it's not worth that, then maybe you won't worry about it. So it's just understanding, again, where you're at, knowing how is earning more income or bringing forward more deductions going to impact me. And then one of the other key areas is government benefits. So having an understanding of what thresholds may be for youth allowance or for New Start allowance or for family tax benefit, HECS debt repayments, having an understanding of all these different thresholds so that when you're putting a plan in place, if there is something that you know you're hoping to get, then having an understanding, well, will my income fit this? And it may not even be that you may be eligible for it, but at least you may be able to put a plan in place to go, okay, I know that I'm no longer going to receive that, therefore I need to budget differently. So it's not always about saving tax, it's about understanding how much tax you're going to owe or how much benefits you may be getting, so you can put a plan in place based on that. Now, next I'm going to talk about some strategies that you can actually use to tax plan. But before I get into that, I want to go through this special offer I mentioned. So I offer tax planning as a service within my business, Rooshock Accounting. So for businesses, is normally $660, which is including GST. And for individuals or investors, such as those that are invested in crypto, it's $330. But I'm offering this for a limited time for anyone that owns one of my Rooshock's NFTs. So if you don't know about them, they come with utilities such as tax returns. Anyone that is a token holder will get 50% off tax planning services. So you're going to get these tax planning services at half price. So I really think that's a great offer, and you'll obviously be able to get involved in the NFT project as well. So I'm really excited to announce that. If you're a bit confused about how all that's going to work, happy for you to send me a message and I'll talk to you about it. But let's jump into these strategies and talk about different ways you could potentially tax plan. So tax planning is all about assessing where you're at. And typically I'll do this with clients in April or May, and we look at current earnings year to date, where we kind of estimate they'll fall by the end of the year. And then we assess, okay, well, are we happy with where we're at? Do we want to stay about the same levels? Do we really need to put some strategy in to reduce income? Or in some situations, we may want to look to bring income forward. So we're all about looking at taxable incomes at a basic level, and then we can look at some other strategies that we could put in place that may reduce overall tax paid. So if you've got a situation where we're happy to stay the same, then there may not be much you need to do. We may have estimated what we're going to earn for April to June. So as long as things are steady, then we just keep going on that. We don't have to worry about bringing forward expenses or reducing income or increasing income or anything like that. We just operate as we have been for the rest of the year. We may optimize some stuff at the end of the year when it comes to distributions if you've got a trust or a company or some other entities involved. But in general, we're not looking to change too much. We then may have a situation, which is quite common, where earnings have gone really well and we go, we're going to be paying a lot of tax. What can we do to reduce that? So that's when we start looking at, well, are there expenses we can bring forward, or is there income we can delay? And so those expenses could be major expenses such as assets. We could be looking at prepaying some expenses, or potentially looking at super contributions, which again, they'll have to get their own advice on, but it's just talking about the tax impacts of these things. You could look at reducing income. So maybe there's a big project and you might be looking to take some time off. So you do take some time off in June and that project doesn't get billed to next financial year. Those are the types of things you're looking at because you're looking to bring overall taxable income down. There are some situations though where you may want to increase taxable income. So maybe it's been a really low year and you're going to look to try and push things forward because you know next year is going to be really large. So you may look to reduce expenses. If there's things that you're thinking about buying, you may put them off and do them in the next year. Or you may try and push out as much work as you can so you can invoice some more jobs in this financial year. So it's not always about reducing tax. Sometimes it may be about balancing tax over multiple years, and that's why I mentioned understanding future financial positions is really important. And then you're also going to look at other strategies such as structuring, which is a bit more advanced, that may be able to reduce your overall tax position. So is setting up another company or a trust going to be worthwhile for you? So there's lots of advanced strategies that could be applied in certain situations, but I'm also wanting to cover the broad strategies. So like I said, I've got that special offer where if you hold an NFT, you can get 50% off those services. But if you're interested in the services and not the NFTs, more than happy to sit down and do a tax planning session with you. Get in touch with me today. And if you're not interested in any of that, but you just want to show your support, hit the like button, hit the subscribe button, drop a comment. All those things help me grow the channel. I appreciate you watching, and I'll talk to you again soon.